Hi, I'm Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is going to be our December market update. So Thanksgiving is behind us, and we are all of a sudden into December, last month of the year, and we are fully into the seasonality of the Phoenix real estate market. The number of listings on the market has stayed relatively flat, if not come down a little bit. So we're hovering in between that 18,000 and 19,000 active listings on the market. And things are just kind of slow. And anecdotally, it's kind of situational. We here at Myriad have been super busy on the buyer side, to be honest, and the properties that our clients are interested in, some of them are even still getting multiple offers. So the thing about right now are the buyers that are looking for homes are incredibly serious buyers, very few looky-loo buyers that are out there. So if they're looking, they're very interested and they need to do a transaction soon. So as a seller, anyone that's viewing your property tends to be super motivated and is a real buyer and not just somebody viewing homes for the fun of it. So one of the reasons why we're so busy on the buyer side is we are, 2 to 3 months outside of that dip in mortgage rates we saw, where last month everybody that was applying for a mortgage could typically get something with a 5 handle in front of it, high fives, but you were in that high 5% range. Since then, rates have come up a little bit, but they are still staying in that low 6% range. And so looking back over the course of the last 2 to 3 years, we know that every time mortgage rates dip down close to that 6% range, we see an influx of buyer activity. More buyers applying for mortgages, which then translates into more transactions in that 30 to 60 days later time frame. Mortgage rates came down last month because everybody was certain, that it was 100% certain that the Fed was going to cut rates in December, maybe even 2 more by the end of the year. Well, since then, the Fed has really talked that back. They've gotten a more hawkish tone, and it seems like to me, just based on looking back at history, anytime our mortgage rates get close to 6%, the Fed gets nervous and really gets a hawkish stance because they want mortgage rates to come back up, because for them, more people buying homes, moving, buying stuff, means higher inflation. So they're really wanting to squash that, keep mortgage rates a little bit higher so that they can still keep inflation under control. But the market is constantly looking out ahead. So even though they have this hawkish tone, mortgage rates didn't jump up super high. So the markets are still expecting the interest rates to come down and for the Fed to cut rates. Now, it was with 100% certainty that they are going to cut in December, and now I think it's like 40%. So people aren't quite sure if the Fed will cut in December. I, for one, think they still will. The job market continues to be pretty soft. We're not going to get all the reports that we typically get because of the government shutdown. They're just not going to do them. So we're going to end up skipping a month of data, but anecdotally, and from some other sources, you can extrapolate that the job market is significantly weaker. We saw the unemployment increase. So I'm still firmly in the camp that thinks the Fed will cut rates in December. And if that happens, we will see the 10-year come down and we will see mortgage rates come down some. So we've talked a lot about in previous videos the shadow Fed, and this is Trump nominating somebody to be the Fed chair well before Jerome Powell's tenure is up, which is in May. I think that as we get into December and into January of next year, we will know who that person is going to be. And that person is going to be a yes man. We know that for the most part, Trump puts people into these positions that listen to what he says. He wants to cut interest rates. He wants to make lending more affordable, not just in residential, but in commercial, because there's a lot of things that are clogged in the system, a lot of projects, a lot of things that want to happen that can't, because interest rates, the cost of borrowing is so much higher than what it should be. If you're a seller and you're listing in December, that is fine. Just know that the buyers that are actively looking, like I said before, are really serious buyers. that the level of competition for you is also lower, but days on market tend to be longer this time of year. So if you're not getting the showings or the traffic that you want, then you probably need to be a bit more aggressive in your pricing and in your presentation. Also, and I say this every year, that if you decorate for the holidays, try to take your photos before you decorate. And if you don't, and your home does not sell before the holidays, make your agent take new photos when the decorations are down. There is nothing more tacky than looking in the MLS and seeing photos of a home that's full of Christmas decorations and it is now February. So be prepared to either take photos today or have your agent retake photos once your holiday decorations are down. I would also say that if you don't have to list right now and you're not willing to necessarily be more aggressive in your pricing, there's nothing wrong with potentially waiting until the spring of next year. So I have several clients that have, one, pulled the home from the market over the holidays, and several that are in the pipeline that plan on listing that second or third week of January, which is when, for Phoenix, our spring selling season kind of starts. So if you're not in a position where you have to list and you're not going to be aggressive in your pricing, maybe wait through the holidays and go ahead and list your property in that mid-January, early February timeframe. If you're a buyer, this is the best time to be a buyer. So you're getting sellers that are motivated, typically. You have less competition because a lot of buyers are waiting until after the holidays as well. And so you have some flexibility there. As I mentioned before, we're super busy on the buyer side. So if I'm busy, others are probably busy, and we're kind of noticing that as well, where some of the homes that our clients are interested in are actually getting into multiple offer situations. And when I say multiple offers, that's just one other one, maybe two. And so if a house looks really good and is priced fairly accurately and you are interested in it, be prepared that others are seeing it and they might be interested in it as well. Those homes that are priced a little bit high, maybe need some work, those are the ones where you can get a good deal on it. There's going to be less competition, and you can get the seller to, come down in price, cover your closing costs, do more repairs, and negotiate a little bit harder. So it's kind of depends on the situation right now, because we're on the heels of rates coming down. So we saw an increase in that buyer activity, but we're also in the holidays where people, buyers are kind of waiting for that spring season as well. But there are some that are active. So it's very nuanced and really kind of location specific and price specific. Thank you so much for tuning in. If you paid attention to all of these market updates, I greatly appreciate you. I hope that you have an amazing holiday season with your family, a great end of your year, and we will see you in 2026.